A lot of information to take in there, James, but I hope you gain some value out of that.
Lachlan, really insightful, as I would expect from you. We do have some questions, however, and I might just start off by asking, based on what you've just said and where Perth is in the cycle, tell us what your thoughts are about the impact of the international borders and national borders fully opening and COVID restrictions ending.
A really good question. I suppose I get asked this a lot from our client base, also referral partners, but a lot of real estate agents, as you can imagine, are certainly enjoying the fruits of the market at the moment, but are probably concerned of what's going to happen. And there's always a lot of rumours around this topic. But I guess it comes down to is, what drives population growth, across Australia, and international borders have been shut for a long period of time. But when we look at job vacancies numbers, particularly in WA, we're leading the race across Australia. So in March and April, job vacancy for job advertisement was up 27% on those months alone, and that's up 110% from last year. So when we look what may or may not happen when the borders open, job vacancies, wage increases are going to drive a lot of activity. And that's not just in the mining space, that's across all sectors. There's a significant shortage of workers here in Perth at the moment. I think that's very obvious in certain sectors, much like the building industry at the moment, mining and other sectors. So I think that job activity is going to generate a lot of migration here from the East Coast, but particularly once international borders open up, I suspect we're going to see a lot of activity from that space as well. Tracking the numbers, if you look at the mining sector alone, the resource sector report announced last week that there's 40,000 workers required currently to keep up with the demands in the local workspace. So I do envision that when these borders do open up, even slightly, if we look at national borders alone, we're going to see significant uptake of jobs here in Perth. And as I've sort of discussed earlier, with the McGowan government looking to localise a lot of these workers, you would suspect that these workers that do migrate to Perth are typically going to pack up their lives and their families to move here, which is only going to put more pressure on the housing crisis that we're currently in.
Fantastic. I have a lot of clients who have an investment property or are wanting to downsize, but they really want to wait for a good time to do that. Given what you said earlier, do you think now is a good time, or what should they be thinking about?
It's interesting. Our advice to our clients, it is case by case, and every situation is a little bit unique. So, without generalising too much, our advice is we don't want to lose exposure in the market in a rising market. So now may not be the time to downsize. It certainly can be a good opportunity to buy that upgraded property or expand the portfolio, expand your exposure in the market, but certainly probably not the time that we should be downsizing or reducing our exposure in the market. And that's in a rising market, which we're experiencing at the moment. So good example is that there's a client we had met with pre-COVID last year. At the time, the data was, again, very strong as it is now in terms of where our forecast is and was for the Perth market. And the advice, for this particular downsizer with quite a strong land holding in Cottesloe, was she was looking to relocate to an apartment or a townhouse. Again, finding a solution is the first priority, and sometimes that can be really, really difficult. But rather than selling down her primary place of residence, we're able to lock in a 2-year lease for that particular lady, and in that time, her $2.2 million property is now worth circa 3, and the advice still remains to hold that property for the short to medium term. Obviously, things may change, and there may be a need to accommodate her, but at the moment, she's certainly got more options than she had previously because of that sort of situation by not, extracting the wealth at the early stage in the cycle and holding on for the upswing.
Okay, great. I also get, I have a lot of conversations with children of clients or clients wanting to pick up an investment property. And typically what happens is they go to a lot of home opens, they put in a lot of offers and are unsuccessful, certainly in the last 6 to 9 months. So is it the right timing now, or should they be holding off? And I guess the other question is, where's the value? Where should they be looking?
Yeah, it is. It's a topical question, and if you look at any sort of economic or property forecast at the moment, everything's really positive, and everyone's really bullish on property as a vehicle at the moment. But I'll flick back to the property clock, which sort of helps answer, I suppose, where we're buying or where we're recommending. Inevitably, we look at property with a long-term view. I think if anyone's built a property over the last 12 months, they've probably done okay. And in the short term, across Australia, short-term view is really strong, no matter what the market is across the East Coast particularly. But again, when looking at property for a long term, we want to identify cities, but also suburbs, pockets within pockets. So areas within cities that will outperform the national average and will push past any sort of, stagnations that may come about. You look at interest rates already, the 3 to 5-year term fixed rates are starting to increase. So we need to factor that in, and we understand that these markets aren't going to run forever. So when we look at the property clock and where we're currently buying in areas that are at the bottom or midway through the cycle, and that is Perth, Brisbane, Adelaide, Bendigo and Ballarat. So they're our two regional cities that we're currently buying. But even looking at Ballarat, portions of that market are up sort of 60-70% from their 2016, 2017 lulls. So again, it is case by case, and depending on the investment, I suppose, budget, but also what the long-term goals are of the client, will dictate where we're probably investing across Australia. But again, it comes back to buying with a long-term vision and long-term goal in mind to try to outperform, the national markets and push past what interest rate rises may be on the horizon.
There's a few noticeable absences on this property clock. What about Port Hedland, Karratha? We're going through a mining boom. A lot of people see the property market moving up there. What's your advice to them?
Yeah, look, we've got some pretty strong rules. We've got 10 rules that we stick to when we're looking at investing in property, and not buying in regions with that are relying on one industry sector. So be that a mining town is one of those rules. Also, not buying in low population centres is another, which sort of hits that mandate, and not buying B or C grade assets is another. So there's sort of a lot of reasons as to why we're not there as a business. But there's certainly a place, I think, for some investors, not for our clients. We're looking at blue chip and risk averse assets, but for very sophisticated investors that are managing their own portfolios, that have got an established portfolio and can afford to take on the risk appetite for a mining play, then there may be a place for it. And they've had some pretty substantial growth. Karratha and Port Hedland are both up 30 to 35% from their previous lulls. So when you look at that, that is significant growth, but you've got to have your finger on the pulse, because those markets, as we've been through, can come off extremely quickly and are very volatile. So unless you're in those markets and have knowledge, and within sort of 2 to 3 months of where the markets are at, I wouldn't be going in there with any sort of confidence. So certainly not markets that we will advise clients, but I can understand that there is a place for it for certain individuals.
You may have already answered this question, but what about down south? People wanting to buy either investment property or a lifestyle asset. What's your advice to them?
Yeah, look, we've got a lot of our clients that, Richard, our buyer's agent down in the southwest, he lives in Dunsborough. He's made, upwards of 10 to 20 acquisitions over the last 12 months, and they've done really well. It's been, again, I think on the back of COVID, that market's been quite aggressive. A lot of people that haven't been able to go on their overseas trips are locating down there for a lifestyle play. But again, it's case by case, and if for the right investor, for a client with an established portfolio that's looking to take on a lifestyle play, they can offset that with a 5 to 6% yield with a short stay accommodation rental return, then there's a place for that. Certainly not as a sole vehicle of investment. If I get a client that's coming to me that's looking for a capital growth strategy, we won't be recommending that as the first sort of vehicle. But again, we've had a lot of our clients who we've bought for in the last 12 months that have done extremely well. Yelling Up Hill in particular, there's been some pretty significant sales in that pocket. They've seen sort of a 30-35% increase in values. But again, that can be skewed off the back of sort of 25 sales. So it's a market within itself. But again, there's a lot of factors that can sway values. It can be sort of within proximity of 2 to 3 streets can change quite significantly. So hence why we brought Richard into the team 12 months ago to assist our clients that were looking to buy down there. You just got to be really careful. But again, for the right client, it can be a place to sort of look out for a lifestyle play.